What's up, legends? Welcome to your Wednesday morning Bitcoin market update. Not sure if you can see the new addition to my channel down there below, but my lawyer has advised that I put a disclaimer on my videos, so make sure you check that out. And as always, know that these videos are just for educational purposes. They do not constitute financial advice. Now that we've got that boringness out the way, what I want to focus on today is wicks. We're going to talk about wicks because this particular wick that we had last night told us a very important story. So I'm going to get right into that. But before we do, let's just take a general look at the overall market. So Bitcoin, we're going to take a look at this a little bit closely, but what's immediately standing out to me on the daily time frame is that this is starting to look a little bit like an M pattern. Let me draw that out properly, something like that. So I want to jump down to a lower time frame and have a look a little bit deeper into that because that's a bearish signal. So very interesting. Ethereum, the current candle pattern right here, we do still have 1 hour to go for the daily candle to close. So of course anything could change, but this candle pattern right now is looking like a reversal pattern. Very interesting as well. So both Bitcoin and Ethereum are showing potential signs of reversal. USDT dominance, well, this just adds confluence. Looks like we are getting that bounce off support. We have not broken support for days now, and looks like we're getting some strength in the candle that's about to close today. I'm not gonna lie, I didn't expect this when I got up today, so this is giving me something interesting to look at. S&P looks like it's having a little bit more of a retracement, not too much to worry about, but Dixie is also another thing to worry about because Dixie looks like it's breaking that channel that it's been in for potentially weeks now. So if Dixie's breaking to the upside, that means people are shifting to cash. And if people are shifting to cash, it's likely that crypto will come down. So let's take a closer look and see if that's the conclusion we're going to draw. Now, for now, Bitcoin is still in its symmetrical triangle. I actually did warn my Discord community about this potentially being an M pattern a few days ago. Here, I just found it for you. On the 4th of the 2nd, I posted this. Anyone think BTC is at risk of giving us a big fat M on the 4 hour? We were here at the time that I suspected it. So not saying that that's definitely what is happening right now because we are still within the triangle. So there is a chance we create a higher low and actually break out to the upside. But I want to get behind the scenes and see if we can figure out what's going on. But before I get to that, I want to recap on yesterday. So on yesterday's video, if you didn't watch it, we had found a very large amount of BitMEX orders. It was 11 million orders at 48,350 short orders. And then we also found some big Binance short orders at 47,700. In that stream, I said to you guys not to take this breakout for that reason, because these two shorts here were going to give us a terrible risk to reward. And actually what happened after that video was more shorts came in BitMEX. It was actually at 49,050, so higher, but it was another $11 million order. It sat there all day. And then what happened was this wick here was when all of those orders disappeared. So we have to ask ourselves why, after this week, would the short orders that were higher up disappear? You got to remember that short orders in the heat map are only limit orders, right? So they can be cancelled at any time before they get filled. So were they sitting there all day on purpose to make us believe that price will break out to the upside and the reversal wasn't up until we got into the 50K region? But what would be the reason that price didn't go there before reversing and instead this happened? And this is where the wicks tell the story. Guys, don't forget, if you're liking this content so far, hit that like button, hit the subscribe if you haven't already. Now let's get back to the story. So what we need to ask ourselves about this entire symmetrical triangle is, during this period of consolidation right here, why would the market make a hold price in that range for a whole day? Because it held there throughout the entire Asian session and the UK session, and we didn't get this move until US session. So why would the market maker hold price in a range at the top of the symmetrical triangle for almost an entire day? And the answer is simple. As a retail trader, if you're watching this symmetrical triangle, you're going to think price is going to break out to the upside, right? So all you're doing is waiting for that, potentially waiting for a retracement. We were waiting for a retracement at this level here. It failed the level, so there was no entry for us. And currently we're struggling at that exact level. So we'll get into what I think may happen from here. However, a range like this at the top of a symmetrical triangle is done by design to make you think price is going to break out and guess. So if you have a bullish mindset, you're going to automatically assume the positive, and you're going to think, well, we're holding at the top of the range. We're probably going to break out. I can have my stop loss just under this wick and take it back up to this previous high over here. And you open a position there at the bottom of the range, thinking you've got in ahead of the breakout. Now, if you have a bearish mindset, you might determine that a different way. A way in being that you might see we're holding in this range, we're struggling to break that line, we're probably going to break down. I can see these wicks here at the top that looks like selling strength. You know what? I'm going to pick the top and I'm going to open a short at the top of this range with my stop loss just above these wicks. And I'm going to write that down at a minimum to the previous candle close. So now within a consolidated range, now mind you, I'm talking about this range before this happened, before this week happened, okay? This is the thought process of retail traders in the range before we get this spike. So now longs and shorts have committed in this zone and the market maker knows that. So what's he going to do? He's going to shift price out one way to encourage more longs because he knows that retail wants to go long and break out to 50K. If you were on Twitter during this, you would have seen Twitter go wild. Bitcoin broke out, Bitcoin broke out. It came straight back within the one candle. This is objective one of the market maker. Induce retail to take a position, right? So when this broke out, if you hadn't already taken this position, retail would take a market buy at the breakout and then price reversed right back on them, took out their stops. And when they break out with force, right? So this looked like a very strong candle at the time. If we go down to the 5 minute, right, this was the breakout here. So you can see these candles were growing in size until it reached its peak and then it just did a full reversal on you. So that goes to show that on a higher time frame before that 1 hour candle close, this looked like massive buying strength, which is designed to make you think, I better just get in now and not wait for a retrace. That's the market maker's second objective, is to create the panic and fear, right? So you see price push out of a triangle with speed and you go, I've just got to get in. That's the panic. The final objective is to take out your stop hunts because that's how they pocket your money, right? So as soon as they've got you to commit to longs, they've reversed the price. Now they've taken out all of the longs, stop losses, they've collected that. But on the way in doing that, on this spike out, they also took out all of the shorts, stop losses. So they collected both sides of that trade in that 1 week right there. Then they send the price in the direction that they actually want it to go, which was down. Now, the difference between this week and if you've been watching me for a while, the wicks that we were talking about when we were heading up. So here's one. By the way, if this is your first time at this channel, welcome. And if you're returning, welcome back. If you're liking this content so far, don't forget to smash that like button, hit the bell notification, turn it to all so that you can be notified every time I upload a new video. And don't forget to leave me comments down below because this is the channel that will teach you the truth about trading and not just tell you to buy the next 100x coin. So if you want to learn the truth about the way the market moves, this is the channel for you. And likes and comments help me to push the truth out to more people and help stop people from getting wrecked. Okay, now let's talk about the difference between these wicks. So this is a stop hunt. This is a stop hunt. This is a stop hunt. What's the difference between those and this wick here, which was a test of the upside? And how do you know at the time which is which? It's very simple. When you get a test to the upside wick like this, so what's happened in this price action here is that price is in an uptrend. The market maker is trying to test the upside to see the strength of the sellers before committing and then further moving price into that area. What's happening here and how you know it's a test to the upside versus stop hunt is price doesn't break the structure. So after that wick has happened, when you get the sell off afterwards, if it continues to create highs in the case of an uptrend, that's how you know that that wick is just a test to the upside and we could probably expect further upside. Same over here. So we had this long period of consolidation. This was a stop hunt below, number one, to encourage people to short because we dropped the range, reverse price on them and take out their stop losses by pushing price further up. And at the same time would have taken out longs longs who had open longs thinking this was consolidation before continuation, and that this range here allowed them to have a very tight stop loss. And so as you can see, one spike, same thing would have happened up here, would have been a spike to the upside. This was to test the region below. At the same time, took out longs and shorts in both of those wicks, and then they continued price in the direction that they actually wanted it to go. Now, how do you know that these were tests? Because it maintained the structure. So after this wick sell-off right here, these candles did not break a support or change the trend. It stayed on track. Same thing here. So this candle here, afterwards, the reaction did not break the trend. Whereas when you look at this candle now, we had this long period of consolidation and the reaction after that candle broke the trend. So that's how you know that wick there wasn't a test to the upside. It was a stop hunt to bring prices back down. In combination with that, the short orders above, as soon as that wick happened, they disappeared. And that tells you that the market maker filled his bag sufficiently in this wick alone. He didn't need to drive prices higher for him to achieve whatever his goal was. Now, where we are right now, we need to determine whether or not the market maker wants to drive prices lower still, or can we expect a bounce today? Zooming out to the 4 hour again, from here we are still within the 4 hour symmetrical triangle. 45,900 is where long orders were yesterday. However, we want to know where are those right now. And at a quick glance at the heat map, you can see here, it's looking like it's not as strong as I would like it to be to expect a bounce, but it does look like price wants to come back to test this wick here. So we're looking at around 45,250 to 45,050, which is in this zone here, which would come back just to test the bottom of the triangle. So that's what we need to watch for. As I mentioned, the orders there aren't big enough for me to expect a bounce, but I also don't want to short from where price is right now. So for me, my play of the day personally is I want to see how price reacts if we get back into this zone today. If more longs build up on the heat map in the meantime, and I feel like I'm going to get a strong bounce, I'd be okay to long from here and expect a breakout, and I'll talk about the targets in a second. However, if we don't get that bounce, because I missed the perfect short, this happened in my sleep, so that's what happens, we're human, unfortunately. I now need to look for the best, safest opportunity, which would be we need to fail this level, ideally break this as well, then come back for a retest. That would be my short entry to then ride further down. So those are the two sorts of things that I'm personally looking at today. As far as targets, if we get that bounce, there's not a lot that's really standing out to me to the upside. There is that 48K level, not all that exciting to be honest. And these 46,450 levels, also not that exciting, but they are levels to watch if we do get a bounce. And maybe if we bounce, we will get more orders come into the order book. So it's probably just that everyone's sitting on their hands right now. And in BitMEX, there's really nothing to aim for above. See these red, these were the 11 million orders that I was talking about, the second level that came in up here, and they disappeared as soon as we got that wick. See how they're now gone from the heat map? That was the candle that we were just talking about. So to the upside, I can't see any kind of exciting targets. To the downside, it looks like this is a last minute attempt, but when I'm looking at the kind of number that is below price, it feels to me that it's a retracement number before further continuation down rather than a bounce number. And the reason that I say that is just because when we're looking for a big bounce, you would expect those numbers to be a lot higher. So right now we can see on BitMEX at 45,550, there's 4 million sitting at that number. When I want a big shift out, like a big move like this, I want that to be up much higher than 4 million. And the same goes for Binance. When I'm looking at these bounce numbers here, sitting at 482 for 45,200 and 45,000 has 520. That's okay. It's okay, but I'd really like to see these up in the 700-800s if I think I'm going to get a strong bounce. So when I see it like this, it just looks like a test of a previous support, and a test of a previous support is only going to give you a little bounce. So it could even be, if we're looking at price action right now on the 1 hour, it could be that price continues down, we get a bounce, we create a bear flag potentially, and then further move down. But from what I'm seeing at the time of filming this, I don't feel much that is going to encourage longs. Now, that may change throughout the day. As you know, orders can disappear, but for me, this is the reassessment level down here at about 45,250, and especially the fact that we did wick out of these zones and now currently are coming back into it with full-bodied candles. There's not much pushing price up right now. So there you go. We need to see if that narrative changes when price does come back to test this bottom trend line. Now, quick look at Ethereum. Ethereum tagged those Binance shorts perfectly right at the top of this descending wedge that we spoke about on yesterday's video. So if you haven't seen yesterday's video and you don't know what I'm talking about, make sure you go back and watch that, because we talked about this exact area to watch for rejection, and we talked about this RSI bearish divergence. So what we need to watch for now with Ethereum is this short only going to take us to this trend line and then bounce up to take another go at this supply zone a little bit higher before we have any sort of a decent retracement? Or are we going to break this trend line, retest it, and then have continuation down? So if you're already short on that entry there, considering Bitcoin looks fairly bearish, still worth holding on to your shorts. I did take a short on Ethereum, didn't do anything on Bitcoin, but what to do now is to reassess Ethereum when it comes back to test this level here or break this trend line. So looking at the heat map, we can see that currently trying to hold price here at 34.0250, which means we're trying to test the wick of this previous candle here. And we also have a level down here at around 3335. So when we transfer that to our chart, we can see that first level is just below this support. So we really do need to break this support now. And then the next one is going to test that bottom trend line. So definitely waiting on Ethereum. Let's see, will we break that bottom trend line or get a bounce? That's what's to watch out for today. All right, guys, that's all I have for you. I hope this was helpful. Don't forget, if you do want trading lights so you can see these orders for yourself, there is a link to that in the description of this video. There are also links to the exchanges that I prefer to trade on, and also finally a link to my Discord channel where we discuss these orders all day long. So if you're really wanting to deep dive into order book trading, come and join us over at the Discord. Check out all the links below. There's lots of resources in there for you. Have the most amazing day, and I will see you guys tomorrow.